Hi friends, let's start today's analysis. So, a lot of things are happening all around the world and so many things to cover. But we'll just take up the major ones. We'll not go deep into a lot of things which are going on. But the important ones which will actually affect our Indian stock markets. See, we are mostly interested in Indian stock markets. So we'll just try to pick up the important points which are, which are important for our markets. So we'll start with the US market as usual, the global markets. And yesterday we had a massive fall in all the benchmark indexes of US. So the Friday's rally, which Dow and Nasdaq and S&P had, it all went away in yesterday's session. So Friday we had a rally for around 650 points on the Dow, but yesterday we lost around 750 points. Similarly, with Nasdaq, we had an increase of around 400 points, but yesterday we lost around 500 points. Similarly, is S&P also. So probably all the gains of whatever we had on Friday, it was all given up on Monday. Yesterday also we were talking that probably it was due to some kind of technical realignment or rebalancing, which Americans call in terms of the stock markets, and that value has probably trimmed off. Plus, an additional losses have also been incurred on the US markets. What were the biggest reasons? One of the bigger reasons was their PMI index came yesterday for the manufacturing data. It was above 50, so around 50.7 or so, but it neither contracted nor expanded. It was pretty much the same as the previous month, which people are now anticipating that we are either into a stagnating economy or a slightly contracting economy. The inflation is very sticky. The unemployment rates are going down, which means now the economists of US are saying that they're entering into a phase of stagflation. What does stagflation means? Where you have lower growth in terms of GDP, but you have higher inflation. That's the worst form of economic cycle you have, because the biggest problem is that you can't stimulate your economy because inflation is very high. When you have high inflation with lower GDP, so whatever the monetary policy and the fiscal policy room which the government has, they cannot pushing for those kind of reforms, because it will anyways keep on increasing on inflation. So you can't have interest rate cuts, you can't have any kind of stimulus etc to the industry, because they will keep on pushing your inflation levels upwards. And since US is a developed economy where the GDP growth rates are anyways not higher, they're around 1.5 to 2%. You don't want the inflation to be higher than 2%. That's why that band of 2% of inflation rate has been kept in a country like US, because the GDP rates actually, hover around 1.5 to 3%. So you don't have a negative real basis dip. That is why you keep the interest rates in such a way that your GDP and inflation matches. So because of that fear in the minds of people of the potential slowdown in economy, that is the reason why the US market reacted very fast, also because of tariff war, but it was mostly reacting to the economic numbers which was coming in US. What was the result? The bond yields fall very sharply, and now we are hovering around 4.14 kind of level. So imagine, just 2 3 weeks before we were at 4.8%, and now we are at 4.14%. It is it's the biggest decline you will see in 2 to 3 weeks or 1 month in bond yields in US. This is happening when no interest rate cut or increase action has been taken by the Fed. They're pretty much the constant. The rate cut cycle which started in US, it led to the bond yields cooling off from 5% to around 3.8%, which is the lowest in 4 months. Now we are slowly inching towards that. Also, because the people want to shift to safe haven, that is why also you are seeing a lot of bond buying, and that is why also the bond yields are going down. So, and we all know this is an inverse relationship. If you don't know that, you can do a Google or probably give me a comment. I'll tell you how it works. But for the time being, on the video perspective, just take into perspective that if the bonds buying happens too aggressively, then the bond yields go down. Now, there is a fear which is emanating in the minds of US people. As of now, people are talking that make America great again. US is doing a fantastic job. Trump is doing a fantastic job, and it will lead to a higher growth in US and good for US. That is why the dollar strength was there. That is why the markets are moving much higher when the Trump came in. Now potentially the markets have given almost all kind of gains which Trump rally or Trump winning the elections has brought to the US markets. It is almost reaching to a level when the entire rally is fizzling off. The only silver lining which remains in the minds of US people, which might think can help the economy now, is only two fronts. One is that corporate tax cuts, which are yet to be announced because it needs Congress approval. Those are yet to be announced. And the other thing is the kind of Fed expenses cut which US is doing, that might bring uh, uh, the what they have is the kind of loans that they have that can be reduced. So actually, these are the only two things which are left now in the minds of people who can think of that the market can be bullish. Otherwise, all things are negative. Immigrants are not happy. You are finding difficult to find the labor now. You are entering into a big tariff war, which means that the inflation will remain high. The consumer price index is coming down very drastically. The consumer confidence is dropping very fast. That means the buying has stopped, which again means that you are entering into a restrictive spending power of the consumer. They will restrict their spendings, and the resultant would be that you will see further slowdown. And anyways, you're kicking out people. You already dropped, or you already taken off around 1 lakh people from the federal or from the government offices, which means that those people who are spending high are again coming down. These all will lead to a slower consumer spending, and these kind of developed countries can only take on their GDP once you have the higher consumer spending. That is why Fed always wants the unemployment rate to be lower. They don't want to touch the labor employment rate. They are very, very sensitive when they do their interest rate policies, that they want to keep the labor market pretty healthy. They don't want to bring too much unemployment, but at the same time, they don't want the wages to go up very fast. So it's a very labor sensitive kind of a market where you don't want the unemployment rate to be very high. Don't forget the period between 2015 to 2019, where the interest rates of US were potentially zero for around 9 to 10 years, but still the unemployment rate was increasing. That was the biggest problem in US in those times. And because of that, all the world markets performed very bad. All the stock market, because US is the biggest consumer intensive country still. Their per capita income is around $81,000, and all countries look to export to US. But what has Trump done? He has signed the paper of that tariff. Yesterday we were talking that there might be some relief for Mexico and Canada. It did not happen. So now potentially from today onwards, the 25% tariff has started. An additional 10% tariff has started on China. What has been the resultant? So Canada has announced a reciprocative tax or tariff of around 25% on American imports to Canada. This would be valued around $120 billion. So $120 billion a tariff is imposed. China has retaliated. China has told that they will be putting 15% tariff on certain products of US, which includes mostly the agricultural products. So that's again a tariff announcement from China. China has also told that they are moving towards WTO, World Trade Organization, to complain about this kind of indifferential tariff that US has announced. I think Mexico will also follow the suit, and on 3rd April, 2nd April, when the reciprocal tariffs are announced in all the world, you will see counter tariffs from, at least from European unions. They're almost, the list is ready, and other countries also, because all countries will retaliate to this. What is the resultant of this? I have discussed this in the previous videos also. The resultant would be a massive shift in supply chains. Now we don't know, after the increasing of these tariffs, which countries imports and exports to which country become cheaper. That has to be now found out, and how much of the tariff will actually be passed on to the US rates, and how much will be bared by the US consumers, and for how long US will be able to bear that, because nothing they are gaining out of it. China has not responded anything to US on the trade war. Whatever differential of trade is there between China and US, it still remains the same. Nothing has changed. India and other countries, anyways, the trade was so less that we don't have the potential at all to change those values. Canada and Mexico, anyway, they've retaliated. Canada has anyway retaliated on the tariff. Mexico is still to do it. Nothing is what America is gaining out of it. People tried to negotiate with him. People tried to have an agreement with him, but I think he was too ambitious, and probably he's too proud to, or probably he thinks it's an insult for him to negotiate for him with people and to find a way, or he wants to actually first show his upfront supremacy, and then probably he wants people to kneel down. It will not happen. I told you in 2000, in my previous videos also, in 2018-19, when Trump started all this, South Korea didn't buckle at all. He kept on increasing the tariffs. South Korea didn't do anything. Ultimately, Mr. Trump had to kneel down and to agree on South Korea's terms. This is the way the world will react. The world will remain silent. Some countries will put all the reciprocal tariffs which they can afford, which they can put. Other countries will remain silent. Ultimately, US consumers and US economy will get hit, and Trump has to bend down. In between, what will happen? You will have some supply chain shifts. You will have temporary pains in the countries. The economists are saying that probably Canada and Mexico will go into a recession now. Their economies will suffer much more because those economies were dependent on US. They were the biggest trading partners because they share the boundaries, and a lot of agreements were done between US administration and these countries to have those kind of bilateral trades. That is why the investments were done in these countries. You'll be surprised to know Trump himself told Canada, and I think I'm just forgetting the agreement name, in which it was agreed that all the auto components of the US car makers will be shifted towards Canada, and Canada will be doing those manufacturing. That is why the investments were done. That is how the factories came up in Canada. That is how that volume of trade increased between China and between Canada and US. But now you are just pulling out of all those things, all the investments around. It's not easy and it's not ethical also, most importantly. And people will lose trust on US. People will lose trust on Trump. People will think that one president comes, he brings his own set of policies. When you shift from Republicans to Democrats, they have a different set of policies. So people will not try to play US for long term point of view. They will have those short term ambitions and they will close it off. They will not do those kind of long term investments, keeping their interest and US interest in mind. That will probably hit US sentiments a lot. Moreover, when you do all these kind of bilateral trade agreements, free trade agreements, that also you are not honoring now. So the kind of agreements which you have done in the past, if you start dishonoring all those things, you have to believe that the investments and the factories and the companies which have been set up, that goes all for a toss, and nobody will like this, including America. And that is how it is reflecting in the numbers of US consumer confidence. It is going down drastically, and you will further see this going down. Tariff war is nothing US will gain out of it. They will probably be the potential loser, and that is why most of the brokerages are not very bullish on US firms and US stock markets now, anyways. Moreover, we already seen the kind of bubble which Nasdaq produces. Considering what DeepSeek has done in China, it's all they can just boast of the technology. They're the front runners, but sometimes they're not. There are other countries who are much more efficient in performing or in developing the technology in terms of what we have in AI or other things. So US markets have to be very very careful on that. But because of the tariffs, now what has happened? The shifting of stock prices will happen. Alignment of stock prices will start to happen. So in Nikkei today, we had a drop of around 2%. Again, the companies which will be hit due to these tariffs are realignment in terms of stock prices. Europe today, we are seeing around 1.5% cut in most of the indexes. The auto index is down by 4%. Although their defense spending is continuously increasing and defense stocks are up. So today, European Union has announced that they'll be investing $800 billion in revamping their defense infrastructure. So those stocks are up, but the auto index is down. That is why you're seeing a massive cut in the European stock market. So these alignments will keep on happening now. Europe will no longer be dependent on US for their armies, their defense budgets, and all those things. They will try to revamp their infrastructure in order to, you know, in order to really realize that they cannot be dependent on US too much. They have to have their own armies and own infrastructure spending as well. They've anyways promised a lot of support to Ukraine, which will continue to happen. And this kind of a divide between US and Europe is not good for the Western world as such. If they want to counter China and Russia, Russia has been the biggest gainer of all these things. What is happening in last 2 months? He has been silent. He was waiting for the Democrats to lose. He wanted Trump to come in. He has invested a lot of money in the elections of US, and now he's just enjoying. Actually, he's taking advantage of the the urgency which Mr. Trump has to close the war between Ukraine and Russia and to just put his collar up, he is responsible for stopping the killing of soldiers and put an end to the war. And that is why now what Russia has done, they have increased their demands to bring the war to a stoppage. They're now telling that America has to distance from the Europe in terms of their spending to weapons to them in for their military expenditure and all those things. They are taking far more advantage which they were wanted to gaining before that. Zelensky's fight with US has further helped Russia in that US has stopped any aid to Ukraine from yesterday onwards. They've announced that they will not be doing any further aid to Ukraine. So now all the aid for the war has to come from Europe. So these kind of shits will happen. The country which will remain silent, subdued, and just watch these things from a distance will gain. So countries like India, countries like Russia, these countries, bigger countries, I'm saying, these countries will be the biggest beneficiaries because they are keeping silent. And US at some point of time has to realize that he cannot fight with all the countries. He's fighting with Mexico, he's fighting with Japan, he's fighting with Mexico, Canada. If he starts fighting, he's already creating a rift between Europe and US. He's already onto a kind of a big trade war with China. He cannot afford now to go against India as well. So I feel probably India will stand out as a beneficiary between all these trade wars, and the time will tell what happens. The But the realignments are happening very fast. Even in India, realignments are happening. Today also our auto index was down around 1.5%. Pharma was also down around 0.4%. But again, I've told Pharma it would be difficult for US to impose tariffs. Something was they have done for Canada also. They have not put the 25% tariff on their oil exporting products. That for those products only 10% tariff has been levied. So US will also try to see what product will impact them more, and accordingly the tariff will be set. Now they have a massive exercise to do it because they have to pick and point all those products, pick and choose all the countries, and pick and choose all the tariff which they want to import, which they want to impose on 2nd April, product wise, country wise. I don't know how that big effort will be done by them and what they gain out of it, but that is how it stands. The countries which will remain distant from US, keeping silent, having a good diplomacy will actually gain both on economic point of view and political point of view. But we are only interested in the economic point of view because we are only discussing the stock markets. So now what will happen? Again, this global turmoil, and if the US economy is really slowing down, see, all these are just numbers from the studies. Actual GDP numbers, we are only seeing a partial decline. Last year, the US economy was going around 2.8%. Now it is showing 2.3%. So, and which is also in line with projections for last year. So the numbers, actual numbers of GDP are not going down. They are still the same. It's only the studies. It's only the preemptive studies or preemptive notions that the economy is slowing down. Yes, some numbers are showing that in terms of consumer confidence, in terms of PMI and all those things. But the real GDP numbers are still to come. But what is the reality? Bond yield is coming down to 4.1%. Dollar index. Imagine, who could have imagined that you were announcing such a kind of massive tariffs and increasing the tariffs day by day, still the dollar index sliding down. I mean, between yesterday and today, the dollar index has came down by 1.4 points. It was hovering around 1.6, 1.107, 1.107.6 kind of levels. Today is 106.2. So massive shift. And if the tariff itself is not able to keep the dollar high, which means the inflow to the US is stopping. It's coming down. Again, a good news for Indian stock markets and for emerging market, but let me keep aside the emerging stock markets as of now. Let me focus only on the Indian stock markets for a time being. It's again a good news because a loosening dollar and the kind of problems which US is creating in those countries and the kind of fight going on, India's GDP growth increasing, and India having a very least impact with this tariffs in terms of because the volumes are too less with US. This again will allow, and the differential growth rate. Our GDP is showing around 6.2% growth, and Q4 projection is 7.6%. So imagine all the world are growing by 1 to 2%, 3% kind of a GDP growth, and India is growing at 7.6%. And with that, you have a 4% kind of inflation, and the nominal GDP growth will be around 10 to 11%, which is huge. China is setting a target of 4 to 5% GDP growth, but they are into deflation. Their inflation target for the entire year is now 2%. So even if I add those two things, you're still around 5% GDP growth overall, nominal GDP growth. India will be around 10 to 11%, two times of it. So people who question the MSCI P multiples of India, they have to take this into cognizance. Today, China is trading around 12 times forward earnings in MSCI index. India is trading around 23 times, 22 times. But the reason is the growth rate differential. If your GDP is growing double the rate of China in terms of nominal GDP growth, then your companies will be growing around 2 to 3% extra differential, which means our earnings can well be around 12 to 15% kind of a growth, which India has seen for so much long of time, so much period of time. That is how this economic wars will slightly, help India. I mean, this is just a theory. Yesterday, again, we discussed the 21,800 to 22,000 levels are very, very strong levels for India. These are the levels from where actually our election rally started, post election of 4th June. If you see the lows of, if you see the closing levels of 4th June, first 2100. So all the hot money which came into India, it all entered between 21,800 levels. Now we are close to those levels. That's what I'm saying. Probably we are very, very, very close to our bottoms. Today, if you see all the major uh, indexes are down in terms of world stock markets, but India is still resilient. We are almost flat. The HDX Nifty at one point of time was showing around 170, 180 points down, but we are still trading flat. In fact, Bank Nifty for the entire day was trading in green, entire day. So what it is showing is some kind of relative outperformance now with respect to the US markets. Yes, our IT industry will keep on be hitting. That will be a problematic area because IT spending depends a lot on US. But US, again, I'm telling, it is going down, not in terms of the spending, in terms of the consumer spending, which will affect eventually the IT company business also. So IT business to a certain extent, and also rupees if is strengthening, then also it will not be a good news for IT. So IT, you have to be slightly watchful what happens in terms of AI and how exactly their BFSI sector gets hit because of this tariff war and all. Apart from that, uh, other industries, I think it will be a relatively very less impact, and probably we'll see some kind of recovery from here on. But we are always talking about the kind of bottoms we're trying to form. Yesterday also, I was showing you the P multiple of Nifty. Most of the time, so these are all theories. Most of the times you rebound from these kind of levels when you start trading below 20 P multiple. Reason is very simple. So if your earnings growth is 14 to 15%, or let's say 12 to 40, 15%, you can't give only a small 20 P multiple to a country. You need to give a higher multiple because it's growing so fast. So most of the time we have rebounded from those levels. This time we'll rebound or not, we don't know. But these are all the theories. So when I present all these things, I'm just giving you my point of view, and I'm also giving you a logic. That logic will work or not, we don't know. Because seller is extremely heavy on Indian markets. We don't know today's movement was whether to manage the index in such a way that, because today anyways we had a weekly expiry for Sensex, maybe that index management would have been done to gain the premium from call and put options. I don't know. My theory says, my internal analysis says that should not be the case. I don't think that was the reason. It was a genuine relative outperformance on Indian markets today with respect to the world. The reason is very simple. We already corrected a lot in last 3, 4 or 5 months, and now the relative outperformance chances or probability is much higher in Indian markets. That is why probably we are placed much more lower. Today also VIX came down. Now VIX is trading around 13.2, 13.4 kind of levels, or 13.5 kind of levels. We have drastically reduced our VIX levels also, which means the markets are not worried now. The markets are, when you don't have VIX of those level, means the hedges have come down drastically. You are not seeing drastic moves of Nifty moving downwards or probably upwards also. So we are capped. Downwards is also capped. That is again one factor which I am seeing, that you will see a capping down of markets going down. I don't think it will take a lot of effort now for Indian stock markets to break below 21,800. Can we go below that? Yes, we can go below that, but the chances are extremely limited with whatever logics I'm trying to forecast. Yesterday also we saw around 800 crores of buying from our domestic investors, which is again a good news. Double the kind of selling from FIs. Today also seeing the index, whatever I'm seeing the index today, or whatever movement has happened in the stock markets, I don't think we'll see a big sell figure from FIs, and I'll not be surprised to see again FNO buying from FIs today also. Today was a perfect day to fall. We had a big downfall in US markets. We could have fall down a lot. There was a reason to it, but I think it was restrictive. It is giving us confidence. We have to wait for 2-3 days more and start trading above critical levels to have a reconfirmation. But having said this, the upside is also capped. As soon as we keep on going upward, there are a lot of sellers are sitting who wants to get out of their trades and who also want to probably FIs are also sitting. So we don't know whether they're exhausted with the selling. That is the biggest point. We are not worried about our retail selling those stocks or the trading positions of Indians. So that is not a worry at all. The worry has always been the FIS selling, and we don't know whether the FIS selling has been exhausted or not. It might continue for some more time. We don't know, and probably they are waiting for the indexes to recover and then again start selling. That answer I don't know. But is the bottom looking protective now? Now that probably I feel yes. We don't know how much we'll be going upwards. It cannot be a V-shaped recovery at all for that matter. It will be a slow recovery. Anyway, the tariff war is still going on. So these kind of global things are happening now. Realignments are happening to the stock prices, relative, and that is what should happen also. We should not punish the entire stock markets or indexes because of tariff war. Yes, there will be specific industries, specific sectors which will be hit. Those you have to realign in terms of their profits and probably earnings and corresponding to stock prices. So those things will keep on happening. One more thing which happened yesterday was the crude. It came down drastically again. We are now trading around $71, 71 kind of dollars in Brent. It has fallen down drastically. The reason was again a slowdown which is getting expected from US. Now we can expect a slowdown from China also because of tariff wars. So the two biggest countries are now again entering into a phase of slightly slowdown. Second reason is that the OPEC is now telling that we want to increase the production. I don't know from where the idea came to them. They have been trying to do that from last 4 to 5 months, but they have not been successful because the prices support was not there. But now they've decided that they want to increase the production again. So I think they're starting with around 1.5 lakh barrels per day kind of increase. Eventually, they want to go to 5 lakh barrels per day kind of increase, which means crude will remain subdued. Again, a very good news for India. That is why all the currencies today are reacting to the tariff war. But India, the rupee was pretty the same. It was pretty much the same. No change. So our rupee is resilient. If you have the crude prices going down, rupee will remain strengthened. It will remain stronger. And that's again a good news for India that the oil prices will remain subdued. That's again a perfect news. So recipes are all there for us to form our bottom very fast. GDP growing is the biggest news which I feel. Anyways, the corporate earnings are not done badly, and those all things combined are looking phenomenal for Indian markets. So overall, I still see, and yesterday also we fall around 2.5% to start with on the broader indexes, small cap, mid cap. Today also it happened in the same way, but again the kind of recovery it happened. Mid cap index it came in green, small cap came in green. So we are seeing a lot of buying also from our DIAs a lot, which means they are confident now the levels have come to buy aggressively. All the cash which they are holding up, they are sitting around 2 lakh crore, 2 lakh crore kind of a cash. They are deploying now. Moreover, promoters are buying. Yesterday also we saw around 7 to 8 promoters buying their stocks. So if the promoter is feeling that this is the level to buy, my companies are undervalued, that's the biggest hint you can have in terms of the bottom formation. And believe me, they are the smartest people. So if you see in June, July, August, we saw a massive QIPs and massive promoter selling, and that was probably the top. And now when they're buying, probably that is the bottom. So they are the smartest investors, smartest people in the entire stock market. They sold their shares at the highest. They are buying their shares at the lowest. Nothing can be more intelligent than these promoters. So follow these promoters' actions very, very closely. Pull out the companies where the promoter buying has happened in last 2 weeks. if I'm not wrong, around 30 to 40 promoters have bought their stocks. Take a glimpse of those companies. Whatever you like, you can look very seriously on buying these stocks, because the promoter is confident, the promoter is buying his stocks. If he's investing his money in buying his beaten down stocks, that's the biggest confidence you can have of bottom formation, of stock prices reaching to a fair value or undervalue. See, we don't have to judge the bottoms. We have to judge whether you're getting a company stock at fair price or not. That is the important thing. Let the bottom form anywhere. And one more thing I'll tell you very sharply, is that it is very difficult to time the market. We all know. It is also very difficult to. The market will not tell you, okay, my downtime is over. Now come and join the party. Let's start the bull run again. You will not get that chance. Market will start rising between the bad news itself. It falls with the bad news. Probably it falls with all the good news. It will regain its momentum within the bad news itself. You will not be able to enter the party if you're thinking that I'm waiting for that party to begin. Believe me, you will not be able to enter. One last point before just closing my video. A lot of views are circulating. I think our friends are also posted on our channel that the stock market will remain subdued for first half of the year. I'll tell you why they are saying it and what is my view on that. See, there are 3-4 reasons why people are saying that first half will be subdued. First is, of course, this trading wars, tariff war, which will take time to settle down. And by May or June, you will exactly know which supply chains have been hit, what are the new supply chains being formed, which product is now cheaper to which country, and probably which country is gaining and which country is not gaining. So that is one reason why people are saying first half will remain subdued. Second reason is that our government spending has also started in third quarter and fourth quarter, which will start showing its results only in the next quarters. Probably and we have the lowest base of earnings of FY25, because last year we had the election year. So this time again, we'll have a double-digit earnings growth in April to May quarter of this calendar year. That is how you will see a jump in the stock prices again. That's the second reason. Third, the budget announcement which has been done in terms of that 1 lakh crore which has been given extra for the consumption in terms of tax breaks, that will also start coming from April onwards only. Announcement will be done in February, but it will start validating only from April onwards. So that's the third reason. Fourth reason, what is RBI rate cut has been done. The study shows it takes around 2 to 3 quarters for the rate cuts to get into an economy and start moving ahead. So that also will happen probably in second quarter of this calendar year or third quarter of this calendar year. That is why again people are saying that the second half will remain good or better. All these things put together, people are saying, or economists are saying, or let's say all the experts are saying that second half will be much better than the first half. But believe me, if the markets will get a smallest sniff that the things are improving on ground, their channel checks are extremely good, they do a lot of research, they'll be the first ones to pick up that there is change happening on ground. Nobody of you and me will be able to come to know, because they do that kind of intense research. They have their strong channel checks. They do that kind of data crunching, and the markets will respond at least 1 quarter before that. So if you're expecting some things to happen good in the second quarter of this, or let's say third quarter of this financial year, the market will start responding in March or April only. That time when the real thing will be happening, it will either become a sell on news, people start selling, or the market will outperform if the performance is better than expected. Those are the only two reasons when the market will outperform what the real GDP or the real numbers the company will be giving to. So don't be in this dilemma that you will be able to time that move very fast. And be very careful when we say that it will be sell on rally for the Nifty for entire first half. It might not happen in that way. Just follow your levels, follow where the big players are doing, follow the concepts, how the economies are looking around in terms of global and internal, how things are panning out, what the government is doing, what good reforms we are getting into it, how exactly our GST numbers, how exactly our vehicle numbers, how exactly our employment rates, wage hikes, all those important parameters are panning out, and try to enter into a stock which are fairly valued now. Don't wait for things to start up. you might enter into a trap. Market will keep on going up because they're seeing those things which you're seeing now. Believe me, markets are very smart. They will outsmart every person who's thinking that only second half will show you a recovery. It might happen the opposite. You might see a second half much worse than first half. There are theories which are circulating in that way also. Reason is people are expecting a very big turmoil in the US market in second half. So be very careful. I would have responded this to the comment which came on channels, but I thought let me just give my thoughts on this. So my view is don't wait for these things to happen. If you are getting your stocks at fairly valued thing, enter into those levels and sit tight and relax. Because our upward trend has started. Our numbers or our things are starting to improve. Others are now starting to deteriorate. That's the advantage on relative performance India will get and relative enjoyment we'll have on this front. So with this, I will end my analysis for today. Let's see how it happens tomorrow and day after. What happens in US markets and all the things. We have to be on our toes now because a lot of things are happening in and around the world. I'll keep you posted as much as I can. Thank you for today. Thanks so much.